Trời ơi, đi cả tháng mấy luôn không thấy mặt Phổi.
Mà chưa không nha chị ơi.
Lạ không? Ngài thấy nhà lạ không?
Đẹp mà.
Chị mới mua.
Cái ngắm này mà. Đẹp quá à. Vậy thôi cô lấy một tiêu, cô lấy cuốn nó ở đây chị. Đẹp quá chị. Em phải để đóng mẹ ở đây tại vì ngày 8 tháng 1 mẹ sẽ lên.
Ủa về ở hay là về lần xíu đi nữa cũng được?
Dạ em về lấy đồ bác bạn em qua chở.
Nói chị. Trời ơi, không có em chị Vụ muốn chết luôn, không ai nói chuyện luôn.
Ghê chị, không quà đâu.
Anh đâu có cùng thế hệ với chị đâu. Trời ơi, một môn quá mà. Đi luôn á.
Em đậu 2 môn rồi mới có kết quả hôm qua luôn.
Vậy hả thầy vậy? Em còn bao nhiêu môn hả?
Em còn 2 môn.
2 luôn hả? Trời ơi.
Tôi sách trong thư viện toàn vậy không á. Ủa nè, người ta phát cho chị hả hay chị phải mua?
Phát trường cho trường tặng.
Doanh nghiệp. Thi chưa chị?
Chưa thi mới làm được rất rồi. Trời ơi, dã man lắm em, học liên tục 7 ngày một tuần, tức là ngày nào cũng học, ngày nào cũng học, mà qua ngày hôm sau phải làm một cái project. Chia nhóm làm project liền luôn á, project của một cái dự án, em viết hẳn ra một cái dự án luôn á, xong rồi phải phân tích bên finance. Trời ơi, phải vừa làm sale và vừa làm marketing rồi R&D, phải tìm hiểu thị trường được các kiểu luôn á. Trời ơi, trời ơi, chị nói là cái này không có thời gian luôn á. Ở thời gian đọc tài liệu còn không có thời gian đọc tài liệu nữa. Ủa bên em có học công thức gì không? Thì mở nhưng mà có cũng công thức nhiều hả? Chị sợ công thức mà.
Okay. Good evening, everyone. I hope you're okay and that you can hear me and see me. Can somebody in the chat can confirm that? Good morning, Kian. Good morning, Anne. John Anne. I hope you guys are okay. So we're gonna. Good morning, Tram. It's nice to see you in the chat. Hope you're okay in Ho Chi Minh City. Okay, so we're gonna begin the financial control, and so I'm gonna explain like I do as usual, at the beginning of a course, what we're gonna do, how we do it, and then we will move to hi Chang, hi here as well. So let me share with you my PDF. Okay, so you must see the the PDF now. Okay, so it's a 15 hours course, right? It's an elective. So I know that usually I do that just after the first one. So I try to make it a little bit different, so you're not bored. Nice to see you again, Ha. And so I try to make something different. Okay, so for me, this course is an elective. So in my mind, I said, okay, I want the students not to get bored because I have the same methods. So I try to change a little bit. So in this course, it's going to be maybe less theoretical but more practical. So we're going to use a lot of Excel this week because I think it goes well with financial control. It goes well with the what is expected from in terms of knowledge. So it's more a management accounting course this time, right? So it's more about cost calculation. But since you are master students, I didn't want only us to work on calculations. So that's why we have 3 parts in the course. The first is about the budgets, okay? Because I think it's an important topic to discuss together, how we build budgets, and maybe how to link that also with the the management team, what is expected, how we can think about it. So building the budgets is about building a forecasted information at the beginning of the year. Then a natural complement to that was to talk about what we call variances. So variances is when you compare the budget with what really happened. Okay, so we're going to calculate them, but also we're going to interpret them. Okay, because I said that it's more practical course, but it's also a course where I want to, I know you are master students, so we want to have some interpretation that you think about things. That's also why I wanted to discuss this third topic, which is called the balance scorecard. Balance scorecard is like a tableau board, it's like a dashboard that includes quantitative and qualitative indicators. So in the last part of the seminar, we will discuss how we can build a balance scorecard. But in that part of the course, it's not going to be about calculations. It's going to be about you thinking about what are the information that would be important for the management to have in this dashboard, in this balance scorecard. So globally, budgets and variances will be about excellent calculations and then interpretations. And balance scorecard will be more about strategic thinking. Okay, so I try to vary that. And maybe we can have a look at the syllabus to get into more details. So yeah, I discussed some things already. Maybe just to about the evaluation of the course. So I asked to Professor Alain Chevalier that we don't have a final exam for this course because it's an elective and we do a lot of Excel during the first part, so it's not easy to build a final exam with that. So I said to him maybe the best way to evaluate if the students have well understood is to have an individual assignment and a group assignment. So the individual assignment will be about the two first part of the course, budgets and variances, okay? So you'll have an assignment to send me, and I think we already know the date, but I don't have the date in my mind. I will provide you with this information later on this week, but before TED as well. The two reports, the individual report, the group report, has to be given back to to your program manager at the same date. And so both of the reports count for 50% of the mark. So the individual report is about budgets and variances, and the group report is about balance scorecard. So I will show you, I have a document that I prepared for this, like I did for the group work for the previous course. So I will show you the rules, but maybe it's better to wait that we cover the topic, balance scorecard, that we will discuss maybe Thursday or Friday, I guess Friday, the last day. And so we will have 1 hour or maybe 2 hours to work in break rooms. But this time you don't have a presentation to prepare. It's just a first step of your job. So you get into groups to decide what will be the project you would like to use for the balance scorecard. And I go in each group just to check that your project looks good. And so you have a report, a written report to give me back at the end of, in January. Okay, so this is how we do things here in financial control. So I don't know if you have any any question for me in the chat already before I get into the beginning of the course. So you have the detailed schedule here, right? So again, I cut that into 5 pieces of 3 hours, but allow me to maybe dispatch that a little bit different according to what we do. But this is globally what we're gonna do. So it's gonna be firstly a little bit of theory, but very, very soon practice with Excel. So I think it's quite fun for this course, the cases I have prepared. But firstly, we have to discuss a little bit the theory. So first part is about budgets, okay? Budgets and responsibility accounting. So firstly, what is a budget? A budget is, I know that some of you guys know already. Let me just, give my my own definitions and what is important for me for this topic. So firstly, a budget is a quantitative expression of a plan of action, okay? So it's a tool that will be used by the management, to translate into figures, into templates, what they want to reach, okay? So, and this is our job as finance people and accounting people, to help the management to build these budgets, to put into figures, to measure what we need, the resources we need to do what we want to do, and maybe try to, with the budgets, refine how our actions, so maybe to say, okay, this one would be too expensive, this one is okay, and so on. So usually it's going to be an help for the management to coordinate the actions of the different population within the firm. Okay, you will have a budget for production aspects, you will have a budget for selling aspects, and so what we call the master budget will be a sort of a summary of the actions. And so we will see that it's very useful also, the budgets, to help the different sections of the business to communicate with each other. Maybe you know that you want some students are still in the waiting room. Could you put them into class? Hi, Olivier. It's nice if you can have a look if someone is trying to join the class. Actually, normally there is no waiting room, so people are free to join. They don't need my authorization to join. So I'm surprised that there are some students that cannot join. Normally they should be able to join. So I don't see no one in the waiting room. So I don't know. Okay. So just for the record, I confirm there is no waiting room here. So there is someone registered in Banking Track, so they don't have to study this course. Okay, no, they don't have to study this course. As we said, each year we have sometimes people from Banking Track, they want to attend the course. So for me, it's not a problem. They are welcome to attend the course. It's just that the last day, when we have the time to work in groups, I cannot put them in groups and they cannot take the assignments because we had some issues in the past where people were saying that they were committing to the group and then finally they say, oh no, finally I don't want to take the exam. So the group were shortened. So people can attend to learn, no problem, they are welcome. They just don't take the exams. Okay, so the budget is made of financial and non-financial data, okay, but mainly quantitative. We will see that when we talk about the balance scorecard, there is not only quantitative data, you can have qualitative data. And budgets, usually you have mainly quantitative data. So just to have forward thinking about the budgets, for me, when I think about budgets, I think about the moment when I was working in an IT company. It was a company of maybe, I think it was like 800 people, I think. And so I was working in the, so I was head of accounting, let's say. And so I was also the second one in finance. So we had a lot of subsidiaries, we had a lot of teams for different perspective. And so when I think about budget, I think about this experience I had, because this is a moment I understand what I have on the slide here about the fact that budgets it helped to coordinate the various sections of the business. That is true, right? Because when you build the budgets of one department and other department and so on, of course, some budgets will be linked. Okay, for example, of course, you will need to determine for the production budget, it will influence the purchase budget, right? Because of course, what you need for production will have to be purchased, and so on. So of course, if you have a certain level of production, you will need a certain level of fixed assets. So the capital expenditure budget will also be influenced, and the cash budget will be the consequence of the other budgets. So all the budgets are interlinked, and budgets are very helpful for the management to have, you know, a view of what may be the sensitive areas that we need to focus on to improve the situation, or what are the people you should put in the same room to discuss, you know, frictions that you can have between one budget or the other, because sometimes you can have also, you know, competition between the managers. So you know, budgets can be also a tool to, you know, it's like a contract between people, sort of. Promotes forward thinking and identification of short-term problems, of course. I think here about, for example, the cash budget. When you build the cash budget, meaning that you build the budget, but all the cash you will receive and all the cash you will pay during the period. Maybe you will identify that during certain period, at the end of some months like March or April or whatever, you will be in a negative cash situation, overdraft situation, okay, according to your forecasts. So of course, the the budgets will help you to anticipate this, maybe negotiate with the bank, a loan and stuff like that. So yeah, it's going to help you to anticipate. That's a key word here, I think, anticipate and you know, implement some actions. Motivate managers to better performance, of course, because the budget will also be for the top management to give some goals to reach for managers, okay? And so you know, that will be a sort of a target you give them. And maybe you can also imagine that for the selling department, for example, if you have some targets in terms of budgets for the sales, and if the selling person, salesmen and women reach these targets, but maybe they will have a commission, a variable salary, right? Provide a basis for a system of control. Well, this will link that with our second part of the course when we have the budget, which is what we would like to do, and then we compare with the reality, okay, actual performance. And so that will be the difference will be variances, okay? So this is the spread between the reality and what was in the budget. And so we will interpret in this second part of the course the variances. If we have positive variance or negative variance, maybe we can correct something. Maybe there's something to improve in the organization of the company. And finally, the budgets are helpful to build to provide a system of authorization. For example, for the fixed assets, you can tell that maybe a manager is free to buy fixed assets up to a certain amount of money, $100,000, for example. And beyond that, well, you will need a specific authorization for the top management, for example. Okay, so we can see that the budgets are really, you know, sort of a way for the top management to communicate with the teams, right? It's not only just to follow performance, but it's also a way to communicate with the team. And so we, finance and accounting people, we are here to make this communication tool efficient for the company. Okay, because it's good that budgets exist, so it provides a guidance for the different teams. But also it's important maybe that people do not think like it's a negative thing, like, you know, they are looked after, that if they do something bad, you're gonna be fired and everything. Sometimes in some companies, this is the culture to have to put a negative pressure on people, but budgets are not only for this, right? It's just maybe a translation of what the management has in mind, so the teams understand better what is the actions to reach. And this someone is writing, or it's me, the red thing. Anyway, okay. Okay. So actually, I anticipated that a little bit, because finally, when I said that this is the budgets are a tool for managers, for the top management, to give some guidance for the teams. Well, it's when we say that maybe you know, it's a sort of a way to translate strategy into short-term actions. Okay, usually budgets are built for 1 year, and maybe company will have a strategy for several years. Okay, and so budgets will be sort of the strategy which is cut into pieces. Okay, and so that will be a yearly goal to reach, to be able to go into the direction of the strategy of the company. Okay, and as I said, yes, the budget will help manager to assess strategic risk and opportunities, and they're providing them with feedback about the likely effects of the strategy and plans. Okay, so we see that again, there is this notion of interaction between top management and the management of the different sections of the company, and budgets will be helpful for this. Just to to be clear about the difference between strategy and operating. So usually strategy is for several years, right? So you have long-term strategic plans, long-run planning strategic plans, okay? And you like maybe for 3 or 5 years, and you will cut that into pieces, into years, and the budgets will be, you know, a part of the strategy, which is what we need to do this year. But globally, we have to understand that budgets is a sort of a short-term action, which is, you know, just only a part of a long-term plan, which is known by the top management. Okay. So about the budgeting cycle. So when do we do the budget? So usually you do the budget before, right? Before the year begins. Okay. So for example, we would say that here, December, we should be finished about the budget of next year. Okay. Usually you begin, it depends on the size of the company, depends on who you are. But if I take again the example that I have in mind, when I was working in this IT company, usually people were working on the budget beginning September, okay? So during September, October, November, they were building the budget for the next year to come with, you know, a lot of interactions between people to build the budgets, okay? So it takes time. And but that's true that it must be finished before the year begins. So how do we build the budget? Well, firstly, you can take into account past performance, okay, the performance of the year that just finished. You can also take into account what is happening, okay, like maybe this year for 2021, people will take into account the COVID-19 situation. So you know, so it's not only about past performance, you know, maybe here we have to take into account the context, okay, and maybe to anticipate future changes, like hopefully, you know, globalization of the vaccination. So things come to normal in September 2021 in Europe and North America, for example. Maybe Vietnam, it's already quite normal now. But globally, yes, this is how we do it, right? We take into account past performance, and we take into account also what we want to do with the market and what is the global situation on the market. Of course, sometimes you cannot anticipate everything, right? Sometimes you know, like the COVID-19, I guess that when people prepared the budget 1 year ago, nobody anticipated the crash of the COVID-19, right? So budgets cannot be perfect. They are not here to be perfect. They are just here to, you know, help us, you know, put on paper what we think will happen so we can implement a plan of actions. And then surprises always happen, right? And so when the year begins, senior managers give subordinate managers the frame of reference, the set of specific financial and non-financial expectation against which they will compare actual results. Okay, so when the budgets are finished, we give the budgets to the managers, so they have their plan of actions to follow. And then during the course of the year, okay, what's going to happen is that people will certainly compare what was in the budget, so what was planned, and what really happened, okay? And maybe that's going to be every month, right? At the end of January, we have the budget for January, and we compare with the actual performance. And maybe we can do some corrective actions, huh? Meaning that we can have budgets which are adapted. This is what we call rolling forecasts. Okay, oh, sorry. Rolling forecast. Okay, so rolling forecast is that when you have, like, for example, you build your budget for 2021, okay, and so then we arrive in January 2021, and so at the end of January, we have, or let's say last year, you prepare your budget for 2020, and then in March, you have the COVID, okay? So of course, when you arrive in March, you see your performance, which is different from what will happen. And so you know that the next month will be different. So you will maybe revise your budget for April, May, and June because you anticipate that the sales will be lower than expected. Okay, so you can revise your budget, but it's always easier if you have already a first set of budget. Okay, so in the normal course of action, this is what happened. You have the budget for the year. Okay, so let's say 2021. Okay, and then let's say you cut that into 12 months, and when January 2021 happens, you have at the end of January actual performance. You compare with the budget, and maybe you can adapt a little bit your budget from February to December, because now that you have seen what happened in January, maybe you can just, okay, we've been too optimistic for this part, we've been too pessimistic for this part. People we hired are more effective than we thought, so we have better production rates, or the price of raw materials has been changing, the oil price has been changing, and so on. So you adapt always, right? So budget is not something which is a dead thing, right? It's a living thing. It's a living thing that you really need to to correct from time to time. And so that will be possible because you can compare budgets and actual performance. And this is what we studied during the second part of the seminar when we talk about the variances. Okay, so just to summarize the planning and control process, usually what you do is that you're gonna, as a manager, you're going to identify business objectives, which, let's say, we're going to open new businesses in Thailand. No, we want to open new businesses in Southeast Asia. So you consider options: Thailand, another business in Vietnam, another business in I don't know, in Singapore or whatever. And so you evaluate the options, okay? You make a selection, and once you say, okay, so Thailand seems the best option for us on the short term, so we prepare the budgets, and so then we do the thing and we collect the actual performance and we compare reality with the budgets. And what we do, we say we exercise control. Exercise control meaning that we do some corrective actions to be able to improve the situation, okay? And maybe also, and that will be also an aspect that I insist sometimes on, maybe when you compare the reality with the budget and you see that there is a difference, maybe you can say, okay, there is this bad performance about the purchasing departments, I'm gonna fire the purchase manager. But maybe before doing that, you have to wonder if the budgets were good, right? Maybe the budgets were too tough to reach or whatever. So it's not always the bad performance, it's not always because of the people didn't work well. Sometimes it's also because the budgets were not realistic. Okay, so we have also sometimes to revise the budgets if it's necessary. Okay, when we interpret a good and bad performance, we have always to remember that it can also be due to our budgets, which are not very good. Okay, so far, do you have any question about this first part? So this is the main principles of the budgets, the timing of the budgets, how they link with the strategy of the firm. Do you have any questions before I move into the next part, which is to present the individual budgets and the master budgets in the chat? Okay, so I move on. So, okay. So now let's talk about what are the different budgets and how they are linked to each other, okay? Firstly, we have what we call the master budget. The master budget includes all the budgets, right? Usually, and especially the forecasted financial statements, okay? So this is also what we call the pro forma statements. So our goal will be ultimately, and this is what we do in the first case we do today, it's to build the individual budgets, and then to be able to build the forecasted financial statements, balance sheet, income statement, and cash flow statement, or that we call cash budget in our context. And so that will be also for me a way to, and for you guys also, to see if you're comfortable with this, with the financial statements. That's why, again, I asked you the pre-reading, because we're going to use them also here. So we're going to have some financial statements which are forecasted, which are linked to operating budgets and financing budgets. Okay, so we're gonna see now what are the different budgets we can see. So two types of budgets again: operating budgets, okay, and financial budgets, which are finally the financial forecasted financial statements. So here you have an interesting chart, which is out from the book that I used specifically for this course, which is this one from Pearson again. So if you want to know more, you can have a look at the book. I'm not sure you need it, but if you need, you can go there, okay, to see the book. And so this is from the book. This schedule, we can see, let's say, what are the, so this is for an industrial company, okay? So we will do industrial company in the second case of the week, and the first case will be about retailer with no transformation. So I just put here, let's say, the most complicated one, okay, which is for an industrial company. Because usually for a retailer, it's a little bit more simple, but the logic is the same. So what are the different budgets we have? Revenue, production, cost of goods sold, and so on. So what is important so far for me to share with you is that everything begins with the revenue budget, okay? And this is real. I mean, this is really what I see. And especially for, I don't know if some of you guys built some business plan for a new business they want to open or something like this. But the question always is, the first question you should ask yourselves when you build budget is, what is the quantity I want to sell? What is the selling price I want to sell it? Okay, so what is the amount of sales that I will be able to reach according to, I don't know, potential market share that you identify and so on and so on. So the first assumption you have to make is to say, what is the product I want to sell, to which price and for which quantity, okay? Why? Because once you know this, everything is just a consequence of it, meaning the production budget. How many people do you need to produce what you want to produce? What raw material are the 2, 3, 4, 5, and 6 schedules in total means a cost of goods sold. Yes. The 2 to 5 will lead to 2 to 6 will lead to the calculation of the cost of goods sold. That's true. So once you know what you want to sell, all the different budgets will help you to determine what is a direct material you need to implement, overhead manufacturing cost you need to implement, how many people you must use to manufacture. And so yes, using beginning and ending inventory, you will determine the cost of goods sold, okay, that you need to face for the revenues. It helps you also to have a it helps you also to have a sort of an idea about what is a potential margin you can have, okay? And once you have that, you can think about the other costs, such as R&D costs, for example, if you have any. It's not always the case. Marketing costs, distribution costs. So as you say, as you understood well, this one, the cost of goods sold budget will be the most important one. Huh? Usually in the budgets, this is the one that will be linked to these budgets. And the other ones are, let's say, independent or additional cost, right? R&D, marketing, distribution. And once you have that, of course, then you have all your revenues and costs. And so you can build your budgeted income statement, okay? So this is usually what you can do. And once you have that also, and you take into account, for example, so also when you know what you want to produce, you know also what are the assets you need, okay? So you can build your capital expenditure budget, for which certainly maybe you will take into account the depreciation into the cost, by the way. And once you know the expenses you must face, the revenues, you can build a cash budget. taking into account a number of days of receivables, number of days and payables, and so on. So you can transform into the expenses and revenues into cash inflows and outflows, okay? That consider also the capital expenditure, okay? So you know the cash budget, okay? I will not certainly go to the budgeted statement of cash flows. I will stop to the cash budget level because for me, the two documents are quite close. Okay, so finally, what do we have? We have the income statement, forecasted income statement that we can build. Then taking into account, the number of days of receivables payable, you can build your cash budget. Okay, so what are the cash inflows, outflows? You can calculate the ending cash at the end of one period. Okay, and once you did that, income statement and cash budget, certainly you can build your budgeted balance sheet, which is, the situation at the end of the year. And so you have, let's say, in sort of purple or pink, I don't know how you call that, all the operating budgets. Okay, so purple is operating budgets. And blue is master budgets, okay? With a pro forma financial statements. Pro forma. Okay? Yeah. But as you can see, what is also important to remember is that maybe we will begin with income statement information and maybe we will begin with revenues. So I don't know if I answered to your question, Dong. I guess so. Do you have any other questions for this little chart? Yeah, you're welcome. Yeah, as you can see, we call that also the financial budget, okay? Operating budget and financial budget. Then afterwards, question of vocabulary. I think I say it again here, but let me go again, maybe. Okay, sorry if it says the same thing at a different time, but so as I said, to summarize, the first thing to decide is the selling price and the quantity you want to sell, and so it provides a basis for the production plans, so labor, material, production capacity, and cash. Okay. In details, the different sales. So we will need then to build these different plans, right? So selling budget, okay. Plan level of sales for each product. Capital spending plan, okay. So that will be for the investment you might do. A production plan will be, what needs to calculate, as you said, Dong, the cost of goods sold, right? How to build the cost of goods sold out of the production plan, because of course, once we know the quantity we want to sell and the machines we need to do, we know the quantity we need to produce. Okay, so we know the material we need to buy, and we know the number of people we need to hire, and also the headquarters people that we need to hire to do the job. Okay, so basic step to develop the operating budget: firstly to prepare the revenue, then to prepare the production budget, direct material usage budget, direct material purchase budget, direct material manufacturing cost, the overheads, ending inventory, cost of goods sold, non-manufacturing, and budgeted income statement. Okay, so what is important to take away so far is really that we globally we need to follow sort of an order to build the budgets, and because some budgets are only the consequence of others, and so finally our goal is to have individual budget, but also to be able to build the forecasted income statement, forecasted cash budget, and the cash budget, and the forecasted balance sheet. Okay, so this is what we do in this first case called Gordon Company case. So before getting into the case, do you have any question? If you don't, maybe you can open the case called Gordon case, Gordon Company, okay? And you also have a template for this case. That I provide so we can save time. So your job globally today, now, it's going to be to get into the details of these budgets, okay? So you just can follow the order of the budgets, okay? So you can see that we have a first tab, which is called OpBud, so it's for operating budget, right? And master budget with, budget in income statement, forecasted balance sheet, and cash budget, okay? So firstly, we get into this, and once we finished here, we can get into the other one. Just for you to know also, here we can see that the first budget is a sales budget. You're not surprised, I guess, because this is what I said just before. And you can see that the second one is what we call the cash collection budget, okay? So it's about what we receive in terms of cash from the sales. Okay, so this one is for the cash budget. Okay, the first one is for the income statement, the second is a cash budget. Then this one will be again, purchase budget will be about the expenses that lead to, to the purchases we need to do. Okay, so, and then we're gonna say, okay, now that we know what is the purchases we need to do, when do we pay that to the suppliers? Okay, so here it's a sort of the budgets are built so we can, think about what is the information we must have for the income statement, then how it's gonna be, cash paid or received and so on, okay? So my guess is that you should firstly read the case. This is a simple case. It's just considered like it's a good warming up. I mean, at least for the operating budget, is not very complicated. Maybe a little bit more complicated for the cash, for the forecasted financial statements. Okay, so I'll let you read the case a little bit. Okay, so you have this case, 2 pages or 3 pages long. And finally, what you do, you follow the order of the different budgets. You go from top to bottom, okay? And of course, what I'm gonna do is that from time to time, I'm gonna share with you the solution, okay? So, and so you can check if there is no mistake nowhere. And so this is our job now for the rest of the day. As I said, some theory, but some practice also with Excel documents. So now it's your time to try to build the budgets. And you, of course, you can use the chat to ask me some questions. So from time to time, every 5 or 10 minutes, I will share the solution for the different budget. So we can, move on, okay? So if you have any question, you can ask in the chat to everyone or to me privately, okay? I will try to answer to what you have. Is that okay for everyone? Can just some of you say that you're okay with that so we can move on? Okay, okay, thank you, Dong. So I'll let you begin. Okay, thank you. So yeah, so now you work with the Excel file and we discuss a solution together, okay? can I go with the sales budget? Did you have the time to do the sales budget? Okay, 5 more minutes, okay? I know from experience that some students go faster and some students go slower for different reasons, because some of you have more accounting and finance experience than others. Some also are more comfortable with Excel than others. So I just need to find a good reason to share the answers. So the good reason is that let's say nearly everyone is finished, and maybe for some who are more advanced, when I share the solution, it's maybe a little bit too late for them. But I think it's better so the other students can can follow. Please use the chat to ask questions if you have any, okay? And also, I don't know how you get organized, but usually when I'm in Vietnam, people maybe work 2 people on a computer, so they help each other. So I don't know if some of you guys are together in the same room. It can be an idea, especially if some of you is not very comfortable with Excel or whatever. Okay, it can be good for you to work together. If not, well, okay, you can at least you can work on your computer from home. And I'm gonna redo the exercise on the screen. Okay, so you can see how I do it. And by the way, you have the video afterwards you can look. So I think that gives you some idea. Okay, 2 more minutes and I begin to share with you the first budget and so on. Okay, we will have a break around like 8:20 or something like this. Okay. Okay, so the way it's built is a little bit strange. So let me explain. For the cash sales, it's a part of the sales that are actually paid cash. So if we have a look at what we have in the case, we have this information, which is here I think, okay, so you have the sales, okay, which are provided. As we can see, we have the sales of March and the sales of August, which are not in our period because we have a period from April to July, okay? So maybe it has an impact somewhere. We will see where, okay? And so we also need to prepare what's going to be the collection. So 60% of the sales should be in cash, 40% on credit. So what we could do here is, I know it's not very intuitive. Maybe I will change that, by the way, but okay. So sales is 0.6 times 50,000. Okay, here. Sorry. Okay, sorry. I changed the format. Voilà. And this is 0.4 times 50,000. Okay, and so we have this plus this. Okay, so okay, let me put it without fill. Okay, so this will be an information that we use in the income statement. Okay, so that will be helpful for us, and especially the total of the period here. The total of the period here would be in the income statement that we have in the next part here. Okay, so certainly when we build the sales here, we're gonna have, you know, some information that is gathered here. Okay, so we need to have an information month per month, and we also need to have the total of the period. We see how we can use it, so it's useful for us. So here it's 80,000. Sorry. 0.6, 0.4. Here it's 60,000. Okay, why is it? So here we have the sum of the two, and here we have 240. So what do we know now? So we know that the in yellow that we have 50,000 expected sales for April, May, June, July, 80, 60, and 50. And for the total of the period, certainly we have 240,000 for the total of the period. Certainly, this is the information we're going to put here, right? And see, we can see that I'm very nice. I put some you know, link with the schedule we are talking about. Okay, so now we already know, you know, the fluctuations of the sales during the period. Okay, and we also prepared the part which is going to be paid cash and the part that's going to be paid on credit. Okay, so I think we can build that already. So cash sales of April will be 30,000. Cash sales of May will be 48, and so on. Okay. And credit sales of last month will be 20. Like this. Okay, so we can say that maybe if we have this, we can relate. So, okay, no colors for the moment. And so here, okay, so I can relate. That's for April. For May, we have these amounts. A part will be paid cash, a part will be paid on credit. Same thing for June. We have 60,000 for the sales of June. Okay. A part will be paid cash and a part will be paid on credit. Okay. So I have a question for you now. I hope you're following. Is it too quick? Is it too fast, or is it okay? It's okay. So I've got a question for you. What is the amount we should have here? The credit sales of April. What is the cash we receive? So we get 60,000. And where do you find this information? Where do you find this information? So sales in March were 40. Oh yeah, that's true. Okay. But is there a place? Okay. Yes. So this actually, yeah, you could find 40% of the sales of March. Also, as here is saying, you can find that in the accounts receivable on March 31st. Okay. So let's have a look. Let's have a look at this. See, we got the beginning balance sheet here, the balance sheet at the end of March. Okay. In this balance sheet, at the end of March, you have the information about the position of the situation of the company, you know, before April, okay, just before we do the budgets, okay. We're like, it's like certainly we are at the end of March, and so we have just finished the balance sheet of March, okay, so maybe we are in April or something, and also we're building the budgets, okay. And so when we want to know what is the part of the sales, credit sales, that we will receive in terms of cash in April, we know that it must be 40% of the sales of last month. But it's also something we have here, right? Accounts receivable. Okay, because in the accounts receivable, we have the sales that are not paid yet by the customers. Okay, so accounts receivable 16,000 here represent, as some of your colleagues say in the chat, 40% of 40,000 sales of March, okay? And this is when we understand that when you build your budget, and especially the cash budget, you will need information from the beginning balance sheet, okay? So you have to be careful to take into account information from the beginning balance sheet. This is what we do here. So the accounts receivable that represent the cash which is still due by the customer at the end of March will be paid in April, okay? So this amount will be here, 16,000, okay? And let me put that in red, okay? And so in red, beginning, so balance sheet, 31st of March, okay? So I try to respect the color game here. So we can see a sort of a step pattern, right? For the, a step pattern for the, for the sales, a part which is paid cash, a part which is paid later. Okay, we can see this pattern here and so on. So here we have, let's say, green. So we can see that for July, there is a part of the sales of the 50,000, which is already received in the, should be already received in the cash budget. So my next question is, what happens for the 20,000 credit sales of July? What can we do with this information? I repeat, we get the credit sales of July, 20,000 here. It's not received in terms of cash yet, as we can see. So what's going to happen to this 20,000? Where do we put it? Exactly. That will be in the account receivable of the balance sheet 31st of July. Okay. Exactly. So that will be certainly here. Okay. So it's important for you that you, I'm especially talking to people who are maybe less experienced in accounting, that you link the different documents. Okay. The balance sheet of last year is going to be, you know, providing you information about the accounts receivable that should be paid during the period. And the 20,000, which is written in red, which is in the sales of July, because we built that and delivered that to the client. It's not paid yet. So it's the part of our sales, which is not paid for the moment, okay? So it means that it's gonna appear in the accounts receivable of the balance sheet at the end of the period, as Chung is very well saying, okay? And so that will be credit sales that will be certainly paid in August, okay? And so here we can also just finish with the collection. So it means that we're going to receive 46,000 of cash from the customers in April, 68 in May, June also, in July. So certainly that's going to be used certainly here, okay? So if you understand well what we are doing, we are preparing, right? Each line, each individual budget we are doing here is preparing information that we're going to use in the in the forecasted income statement, cash budget, or balance sheet. Okay, any question for this one? Do not hesitate to use the chat to ask a question. Yes, you have a question? Yes, it's the ending. It's so 20,000 in July is the end of account receivable. So yes, it's account receivable in the balance sheet 31st of July, okay? And that should be paid, yeah, and that should be paid received by the company in August, okay? I don't know if you can see, should be received July. Should be received in August. And why we have to separate the sale? Well, actually, it's just to help to, so we, in the schedule A, we don't really need to separate that. It's not, because what we're going to use is this one, the yellow line, right? So we don't really need to do it. It's just that we do that so it can help us to prepare the next budget, which is the cash collection budget. So we just have to take this. But frankly, because 80% data is the same, 80% data, what is 80%? 80% data is the same. I don't know what 80% is. But that's true. I agree that maybe it would not be necessary to do this. I see on your data 80%. I don't see 80%. Okay, what we could do is alternate is, we could say, okay, so that's 50,000. That is 80,000. That is 60,000. 50,000. And we could say this one is 60% of this, okay? And this one is 40% of this. So that would be the alternate way to present, okay? Okay, so that would be the alternate way to present it. If some of you guys are more comfortable with this presentation, okay, that could be this. So I don't know if it answered to your question, but that's true that the separation between cash and credit here is not very useful, because what we need for the income statement is this one. So okay, so yeah, so that's true that here it's not very useful to separate, but here it's important because here, of course, we have something important, which is the moment we pay or receive. Yeah, you're welcome. Any other question? Okay, I'll let you 5 minutes and then I show the solution for the next one. So it means that maybe we're gonna have the break a little bit later on, 8:30 or something like this. Or would you like to have the break now? Would you have to have the break now? And so we come back at 8:30 or something like this, 8:33. Because we are finished with something. Okay, so we do the break now. So back at 8:33, okay? And so we can move on. Okay, so enjoy your dinner or enjoy your break, and see you later.
Alo. Alo. À.
Okay, so we are back. I think I'm gonna let you some more minutes to get through the next purchase budget. Just let me explain to you how it works. No, I'll let you handle it for the moment. I'll let you 5 minutes, and in 5 minutes I will share with you the information about this budget. You have some information here. Okay. You have some information here that you can use. Okay. So I'll let you 5 minutes and I discuss with you. If you have any question or something, you can tell in the in the chat. So I share with you the first month already, just to check if you're okay. And in 2 minutes, I will explain in details. Tell me if is that okay for the rhythm, or is it too fast, or is it too slow, or it is okay? It's okay. Okay. Okay, so 2 more minutes and I show the detail of purchase budget. You have the answer for April already, just to check if you are doing right. In 2 minutes, of course, I give some explanation. Okay, so let me share first another Excel file in which I detail a little bit how you must calculate that. Okay, so the way the schedule is built is this way. Okay, you get. So what we want at the end is to know the information we want to provide to the purchase department about how many products they should buy. Okay, so we have enough for production and for what we want. So it's like we're going backwards. Okay, we firstly think about what we need, and then we deduce what we need to buy. Okay, so what we need two things. We need to have a certain level of ending inventory, and we need to have all the materials we will use this month. For desired ending inventory, and I don't come back on the PDF document because it's a lot of comes and goes, but you can read in the document. At the end of 1 month, what we want to have for the ending inventory is at least the value of $20,000 plus 80% of what we need next month. So 80% of the cost of goods sold of next month. So another way to put it is that it's 20,000 plus 80% of, so the cost of goods sold of next month is 70% of the sales, because cost of goods sold is 70% of the sales. Okay. Then we need also the raw materials we will use this month, which is 70% of the sales of the same month. Okay, so that's our total needed. But we have already some inventory on hand. So beginning inventory is, of course, the ending inventory of the previous months. Okay, or it's, so yeah, another way to put it is that for the first month, it's the inventory we will find in the beginning balance sheet, right? Because this is what we have. Is that okay for this one, for this explanation? Is that clear, or do you want some more explanation? Okay, nothing in the, yeah, okay. So I come back to the main Excel. So here, this is my formula, right? It's 20,000 plus 80% of 70% of C5 next month. This one is 70% of the same month, okay? And so total needed is, of course, the sum of the two. And this one, I can put it like this. Maybe I can put it like this as well. So that's the beginning balance sheet of March. Okay, so you can find this information in the balance sheet of March. And so at the end, we have 51,800. So again, the logic of this document is to say, I want to have 64,800 in my ending inventory because I want to have at least 20,000 plus 80,000 of what I need the next month. Okay, just to be quite sure that I will not be short in terms of raw materials. Okay, so that's what I want in my ending inventory, plus what I need this month, which is 70% of the value of the selling price. Okay, so on the whole, I need 99,800. Okay, but I already have 48 in my inventory, so I just need to buy the difference. And so this is an information I can provide to the purchase department. Okay, I think I can drag my formula except for this one, ending beginning inventory, which is of course the ending inventory of the previous months. Okay, so this one is the same than this one. Okay, and for the rest we have the same formula. And I think I can drag now, not for the total, sorry. So and no, here it's not good either because 80% off, 70% off, not F5, but the sales of August. Sales of August, which is in the case, sales of August, it's 40,000. So that should be okay. Yeah, it's correct. Okay, so this is what we have. Always like this, always the and so in the total column, if we need something, we could say that in this one we have, we can do the same logic, but for April to July. So we want a desired ending inventory of the end of July, which is 42,400. The cost of goods sold we need is 35, 56, 42, 35. Okay. The beginning inventory we have is the beginning inventory April. And so here we have this. Okay, this must be, I think, the same thing than this. Okay, so this one is not very important. What is important is this. This one will go, sorry, sometimes I have trouble to find the same color that I used before. It must be this one. Okay, so that will be income statement as well. Okay, but also this one, the cost of goods sold, sorry, would be income statement more than this one. Okay, so again, we are preparing. So that will be income statement. And that will be balance sheet, 31st of July, of the ending inventory. Okay, so this one. Okay, so that was for this one. Do you have any question about this purchase budget? I'm sure some of you already did the next budgets and everything, but maybe some others need some more time. If I were in Vietnam with you, I would check on the computers of everyone, if everybody is okay. Here, I cannot do that. So I just need some feedback in the chat to see if it's okay. If you have any question for this purchase budget. And if not, you can move to the, where is the figure of E10? This one? Can I see? Okay, this one. Okay, yeah. So it's because, so E10, there is no formula. I think you mean E7. So that's E7, E11. So just fit E11, and then I come back to so E11, you have 40, so 40,000 sales of August, 40,000. Okay. So when we do 40, to calculate the ending inventory at the end of July, it's 20,000 plus 80% times 70% of the sales of August. And so the sale of August, we have that in the case, okay? It's here, right? It's here that we find the information. So that's why we were provided the sales of August. So we can calculate the desired ending inventory of July. Okay? And so B10 now, B10. So let me come back to B10. So what is B10? Where is it? You mean B11 or Anne? Can I see B10's formula? There is no formula in B10. So do you mean, yes, that one. Okay. So this one is 20,000 plus 80% of 70% of the sales of May. Okay. Yeah. So again, we are going backwards. Okay, we say what is the ending inventory I want, plus what I need, what do I need for the production of this month? Okay, equal total I need, and then minus what I have already, difference what I need to purchase this month, and this is an information I, from the production department, can give back to the purchase department. So we see it's a simple example, but it helps to you know, imagine how it's organized in companies. So it's really an information that we will provide to the purchase department. Okay. And again, it's linked to firstly the sales we need to do, right? We have, again, this is what the most important, the most important takeaway of today. This is it. So we first imagine the sales we need, and then we deduce the production we want, and then the purchase we want, okay? So next budget is about the disbursements, okay? So this one will not be about the income statement, it will be about the cash budget, okay? So when do we pay things? So I'll let you have a look. And it's 8:51, it's not a difficult one, so 8:55, I show the solution. Okay, so for the next one, this one is about cash budget, right? It's about when do I pay my payables, my suppliers, okay? So this is about this information. How do I split this information, okay? So we can see in the case that the suppliers are paid 50% the next month, the same month, and 50% during the next month. Okay, so it's quite simple. We're going to take this one times 50%. And same thing here. Okay, it's going to be paid. So this one for this one, same thing, 50% the same month and 50% the months after. Okay, so blue to identify where it comes from. So we have the same pattern that we have discussed before. Like, you know, steps. We could find a way to automatize this 50%. We could create some cell somewhere here, right? And say what is the percent. So 50% same month, 50% next month. So we just have, you know, we can change that afterwards. We will do that later. For the moment, it's no big deal. We don't do it for this exercise. We will do it later. Okay, so the step pattern, and so for this last one, let me change the color. %50. Okay, so that's for this one. So again, two information. The first is here. How do we find the disbursements of the last months? Well, we discussed that already. This is an information we can find in the beginning balance sheet, right? So we can have a look. And we're going to check if what your colleague say is correct. So yeah, it's provided here. Actually, you have it here. But if you want to see more, so this is accounts payable. You have it here. Okay. So thank you, Chang, and thank you, Hong. You're correct. Thank you, Kian, as well. That's correct. That comes from so Kian, I'm not sure about 37, but for the two other people, so 16,800, this is correct. Yeah. Okay. So we come back to our Excel file. This one. Can you see it? Yeah, I think it's correct. So this one, so it's 33,600. And so we can say it's red to take the same code, right? About beginning balance sheet. And of course, we will have 29,400 that will be in the ending balance sheet, okay? So we can sum it up now. And I think we can also sum that. Okay, that's going to be in the cash budget. So this is the amount we're going to pay each month. Okay, so thanks to our budgets, we are able to evaluate what is the amount we're going to pay each month to the supplier from April to July. So that's going to be very useful for the cash budget. Oh yeah, sorry. Thank you. Should be correct now. Sorry for the, thank you, Kian. Okay, so I think we are okay now. So again, first budget is about the income statement. The second one is about the cash budget. The third one, income statement. The fourth one, cash budget. We can see that we prepare really the job for what we're going to have to do later on, which is to build a budget income statement, to build the cash budget, and so on. Okay. We still have 2 more steps to go, which is about the operating expenses. So same thing. The first one will be about the income statement information, and the second one will be disbursements for operating expenses. So that will be about cash paid out for operating expenses. About the wages, I know that usually there is a misunderstanding between you and me for this one. So you have the wages which are explained here. So we pay, so the wages of 1 month is simply fixed wage plus 50% of the sales, okay? And then once you calculated the salary, you just take into account the fact that 50% of this salary is paid the same month and 50% is paid the months after. Okay, so this information here is the one you need for the next budget for operating expenses. That 50% will be only needed for the cash disbursements budget. Okay, so that being said, I'll let you, let's say it's 9.02. I'll let you around 10 minutes. I come back to you at 9.10 for the operating expenses budget, and we discuss, okay? If you have any question, you can ask me in the chat. Of quick question. E11, my calculation is 80% plus 40,000 plus 20. Is that correct? No, you need, no, because it's, if you take that, you forget that the cost of goods sold is 70% of the sales. And we want 80% of the cost of goods sold. So the right formula is this one. So you miss 70%. Okay, so what you put in your formula is you say, okay, my ending inventory is 80% times the sales of next month. But it's not the sales of next month, it's a cost of goods sold of next month. And so the cost of goods sold is 70% of the sales. Okay, cost of goods sold is 70% of the sales. Sorry, maybe it's better to say, to write it this way. Is that correct? Do you have it? You just forgot the 70%. What we want in the ending inventory, not 80% of the sales of next month, it's 80% of the cost of goods sold of next month. So you miss one step, which is to calculate the cost of goods sold out of the sales. And we know that it's supposed to be 70% of the sales. So it's 80% of 70% of the sales. Can you go back formula C14, please? C14. So the beginning inventory of the months is the ending inventory. So beginning inventory of May is ending inventory of April. Okay, the idea is this. Sorry, I cannot see your screen. Okay, so can you see it now? Okay, so C14, right? Okay. So the beginning inventory of 1 month is the ending inventory of the previous month. So the formula is just that you pick up the information from the desired ending inventory of the previous month. Okay, because of course the ending ending inventory you want at the end of 1 month will be what you have the next morning in your beginning inventory. Okay. Can we show the next budget, operating expenses budget, or you need more time? Okay, or more time? Okay, so I go for it. So let me find my yes. Let me find my Zoom. Sorry, I have so many files open. I cannot find my Zoom screen. To come back to okay, I know. Okay, no, I need that for, I was saying, okay, I can move on, but no, because I need my screen to be able to share my screen, but I'm sharing my screen already. Okay, so that's why I don't see it. So you must see my screen now. So the wage is, it's 2,500 every month for the fixed part. This is what they say. For the variable part, it's 15% of the sales. So no big deal, 50% of the sales. Okay, so as I said, at that time, you don't care about 50%, 50%. You will care about that when it's the time to pay. For the moment, let's say that total wages and commission represent what you will have on your payroll, right? When you receive your payroll. So this is the expense of the month, regardless the moment when the wage is paid, okay? This is the expense of the month. You can see my Excel file, right? Now. So it should be okay now. For the rent, I don't remember what they say about the rent. I think it's very simple. It's 2,000 every month, paid as incurred, as we say, meaning paid immediately without delay. Okay. Insurance is more tricky because insurance, we have the information. So it's said 200 expiration per month. Okay. So let's say 200 expiration per month. Okay. Miscellaneous expenses, it's supposed to be 5% of the sales. Okay. And depreciation is supposed to be 500 per month. So okay, so that's 500. So we should be able to sum, no, sorry, we should sum, but sum also with the wage and expenses. So I had a 45,250. I don't know what is related to. So you tell me, but I don't know. What are you talking about, Chang, when you talk about 45,250? Okay, I don't know. I calculate the schedule F. Schedule F. Okay, so we talk about that in a few seconds. Just checking if what I shared with you is correct. Yeah, it's correct. So this is the budget for the total operating expenses, okay? So do you have any question about this schedule E? So that's about operating expenses. So again, this information will be in the income statement, right? All this information will be in the income statement. Total and scale. I don't understand what you are doing actually. 45,250. I don't know what you're calculating. Calculate schedule F total wages and commission only. So for the total of the period, you mean? Okay, we see, huh? Okay. So now it's time to do a schedule F. So now you take your expenses, but you think about what is the moment when it's paid. Okay. So this is for the wage and commission. Of course, this is when you're going to take into account the fact that there is 50% paid now, 50% paid last month. Okay. So that's the total. Okay, that's the total here. And you got the rent and miscellaneous expenses. Okay, so I let you finish this. And we discuss the solution in a few moments. So I let you maybe 5 more minutes to do it. Let's say 7 minutes. So 9:23 for me. Okay. Sorry, I'm a little bit precise, but since I don't see your screen, I don't know if you're okay or not. So I try to find a good balance between give you time, but not too much time, so you're not getting bored. Okay, so yes, that is, I just here, I just checked only the total, but it's correct. All the amounts are correct, so it should be okay. So you can move on to try to do, firstly, I think, income statement. Stop at the operating income level, then cash budget, then income statement, finished, and then balance sheet. Total disbursement. Après, I don't understand what are the. Okay, it must be the total in the column. Okay. Yeah, it must be the. Okay, I understand what you do. Okay, you can move on to the next step. Yeah. Okay, so it's correct. In schedule F, disbursements, can you explain why we do not put insurance and depreciation in the calculation? Yeah, absolutely. I'm stuck on the cash budget. Okay, so let me firstly explain to everyone why we don't have depreciation and insurance. So do you have someone who can tell why we don't have depreciation in the disbursements budget? Is there someone who could say that in the chat to answer to the question of Tran Truk? I have the same result like Mr. Yu, so it's correct, Chang. So again, in the schedule F disbursements, can you explain why we do not put insurance and depreciation in the calculation? So is there someone who could tell in the chat why we don't have depreciation expense in the disbursement? because we paid, okay, because we paid insurance before, that's for insurance, but for depreciation, what is specific with depreciation expense? So depreciation is an expense which is never paid. Never paid. Exactly. You understand now. The depreciation expense is an expense we never pay out. Okay. You put it in the expense, but you never cash it out. Okay. And so for the insurance, I prepared something for you guys. In the insurance, firstly, let me retell you that for the insurance, we have this information in the balance sheet at the beginning of April, prepaid insurance. So prepaid insurance, yes, thank you, John. Prepaid insurance is, so depreciation expense, it's never paid out. It's never cashed out, okay? So it's a permanent difference. For insurance, it's different. As here was saying, oh no, Kian was saying, we paid insurance before. So that's why I said prepaid insurance. So let me show you in an Excel file. I prepared something, it's a little bit accounting, but I hope you can still get it. Yeah. So yeah, so this is what I prepared for you guys. So certainly, okay, for the insurance, it is said that we have 200 expiration per month, and the beginning balance sheet prepaid insurance balance sheet on the 31st of March is 1,800. So certainly what happened is that on the 1st of January, we paid 200 times 12, right? We paid for 1 year. So what happened in terms of accounting entry, if you're comfortable with that? We have prepaid insurance in the balance sheet and we pay cash, okay? So at that moment, we have sort of an amount in the prepaid insurance of 2,400 prepaid insurance. So this is in the insurance we prepaid for the entire year to come, okay? And so now every month, this is the accounting entry we do. We take 200 out of this amount, okay? And we put it in the insurance expense, okay? So for example, at the end of March, if the prepaid insurance was 2,400 at the beginning of January, at the end of January, January 31st, February 28th, March 31st, we take 200 out of the prepaid insurance to put it back in the insurance expense, okay? So we can see that each month, this is what we do. So every month you can see here, this is what we do. Insurance expense, and we diminish the prepaid expense because it's not prepaid anymore, right? It's part of the insurance that is related to our period. But you can see here, there is no cash involved, no cash involved, okay? As involved. As Kian was saying, I guess, it's paid before. So it's at the beginning of the year that we paid the cash for it, okay? So each month we paid for the entire year already. So each month our job is just to put back 200 in the expense. So our income statement reflects the expense of the month, okay? And so at the end of March, for example, we paid 2,400 upfront and we put 200 each month in the expense. So there is only left 1,800 in the prepaid insurance. And so we keep on going this April, May, June, and July, 200, okay? And so here, at the end of July, because we put back insurance expense every month for 200, we will have certainly 1,000 left. And this 1,000 left is 200 times 5 months. This is August to December prepaid insurance. Do you understand? So the quick explanation is to say it's been paid before, and the accounting explanation is to say it's been put in the prepaid expense when we paid the cash, and each month we just take out of the prepaid expense 200 to put it back in the expense, because we want, you know, in accounting, we always want that the expense is in the income statement when the job is done. So insurance of April should be only in expense in April, not before, because before we did not receive the service. So we should not take that into account in our expenses. It's not something we consumed yet, okay? So that's why we are able in our budget to put back, where is it? Which one is it? I have so many files open now. Must be this one. Yeah, this one. So you should see again the document you are filling in. Can you see it? Yes, can you see it? So that's why we do not have insurance and depreciation now, because it's already been paid. Okay, so we have only the disbursements for wages and commission, which is 50% of, sorry, that's not the goods, that I'm not sharing the proper one. Okay, I'm sharing the proper one, but this is not the one I'm seeing. Okay, so give me 1 second. I have too many files open. Okay, so we are here. So now, okay, where I am on the right file. Good for me. Okay, so now we can fill in this document, because we know why we do not have insurance and we do not have depreciation. I just explained this. So we have only the rest. And so this one will be 50% of this month, okay, for the wage. And that will be also 50% of last month. I forgot to put 50% here. So that's for this one, right? So let's say that, okay, blue, blue, blue. Then after we get 50% of the wages and commission of the next month that we have here. I think I can drag my formula. I'm gonna save some time. So this one is for this one and this one. And so we observe the same step pattern. Okay, so this one is not correct. Okay, and this one is for this one. Okay. And so we just need this one, the first one, the 50% of last month expense for April, which is of course an information we find in the beginning balance sheet, okay, on the 31st of March. So 400, 250, according to Don. Sorry for the pronunciation if it's not correct, or your name. And so, yeah. And so we can sum now, I guess. The rent is just the same, paid as incurred. The miscellaneous expenses are the same, paid as incurred as well, so we can drag, easy. And so for the total disbursements, now we can take the 3 line here, and we are finished. Okay, so this is what we should have. So rent certainly will be used for the income statement. Sorry, it's not the right column. This one. This one will also be used. This one will also be used. Maybe the total for operating expenses, I don't remember. Okay, so now we have prepared all the information we need to do the 3 budgets, the 3 master budgets, so income statement, cash budget, and balance sheet. But firstly, before moving on, I would like to know if you have any question about this Schedule F. Or is it clear for everyone now? So what we did so far, we just built the individual budgets. Some will be used to for the income statement. Some other will be used for the cash budget. Okay, so we prepared the work. So that's why the total period column, this one, you know, sometimes people don't even do it because they don't see the point. But for me, it's interesting because, you know, it's just, you know, sort of a summary of the information. And so you will be sometimes able to use it directly in the next step. Is that okay for everyone for this budget, individual budgets? So I have no answer, so I guess this is okay. Okay, so if you have question, you can still ask. Okay, so now you can move to the next tab, right? So firstly, I would like you to do this. Okay, stop to do the income statement, but you stop at the operating income level for the moment, because for the interest expense, from the cash budget. So you need to do the cash budget to be able to do it. Okay, then you do cash budget. Okay, so for the cash budget, the beginning balance is, of course, beginning cash balance. Okay, cash collection from customers is Schedule B. Cash receipt is the same thing. Okay, in cash available, you have the formula detail here. So it's 3 equal 2 plus 1. Okay, cash receipt plus beginning balance. So that's total cash available. So that's the first total you need to calculate. On the other hand, you have the cash disbursements. So out of the budgets we did together, purchase, operating, and acquisition of new fixtures. So maybe there's something here. To see in the case, okay? Disbursement, total disbursement, that's the sum of this, right? So the minimum cash balance is also something you must find in the case. We want at least a minimum of cash balance, okay? And then the cash needed will be equal to 4 plus 5, meaning disbursements plus minimum cash balance. It's the same approach than for the desired ending inventory, I guess. Okay, and so we have the excess of cash and deficiency. And from there, you will see some information in your case. About this. Here. So you have some additional information here, okay? That will be useful for you. So Gordon Company bought new fixtures for 3,000 cash in April. Depreciation for these fixtures included in the 500 monthly depreciation. The company wants a minimum of 10,000 as a cash balance at the end of each month. Management plans to borrow no more than necessary and to repay as promptly as possible. Borrowings and repayment occur at the end of the month. Interest is paid under the term of the credit arrangement every quarter in March, June, September, and December. Interest rate is 12% per year, and you consider APR, so 1% per month, okay? So I'll let you 5 minutes to do the income statement to the operating income, okay? Then I correct, and we will have some time for the cash budget. Okay, so I'll let you work on this for a few minutes and I come back to operating income statement is easy. So try to do it. I give you a solution in 5 minutes. And once we are done with that, the cash budget is a little bit more complicated. So we will not finish today, I guess, which is okay because usually we need a little bit more time than that to do it. So we see, okay? So we will try to finish at one moment today and we see what we do at that time. So for the moment, please, income statement till the operating income level. And we discuss the solution. For the column details and totals, it's my presentation. Don't get busy about that. Do what you want. Okay, maybe I can say what I mean by that. So this. Voilà. So I put the totals for these ones in the green. So I use the green area. Okay, it's just for the operating expense that I detail, but you could put everything in totals. I don't care. Just don't waste time with understanding that. It's not important. Sorry. Okay, so are you done with the income statement? I think it's not very long. Can I correct the income statement? I think it's okay, huh? Because it's not very long. Okay, so you should see my Excel file now. So I have a proposition for the operating income. It's less than that. It's less than that. I have 3,200. 3,200 for the operating income. Sorry. Yeah. Okay, let me give the solution. So for the sales, you just go and take the total here. So total sales for the period, it's 2,400,000, 240,000, sorry. For the cost of goods sold, you have the total as well here. So I'm sorry because I did a mistake. I said this one is orange, but it's not. This one is orange. Sorry for my mistake. This is the cost of goods sold that we need, okay? So here we can calculate the gross margin. Then, as you can see, Schedule E, wage and commission. Wage and commission. And I think I can just drag my formula. Okay, and so now my total operating expenses, this is it. And maybe I'm gonna put a minus sign in front of it. And so I can calculate my operating income. 3,200. Yeah. So okay, so you found your mistake. So that's perfect. And so again, we cannot finish the income statement for the moment because the interest expense will be calculated from the cash budget. So now I just need to have some feedback here from you guys about this budgeted income statement. That is not difficult to build if you prepare well the work before, right? But I don't, as I'm not in the room with you, I don't I don't see if you guys are finished or if it goes too fast for you now, or if the rhythm is correct. So I just need some feedback or if you have any question, let's say, if you have any question, you can use the chat to ask how I calculated this or that, so I can help you and explain. Okay, so I let you a few seconds to for the potential question in the chat. If I don't have any question, I will consider that I can move on to the cash budget. So it's, you know, if you have any question, feel free to ask them now. I would be very happy to answer them. Not sure where is the source of operating income. It's gross margin minus total operating expenses. So usually what you do is sales minus cost of goods sold equals gross margin minus other operating expenses equal the operating income, which is also, as you know, maybe what we call the EBIT, right? Earning before interest and taxes. And by the way, shouldn't say net income, but maybe more earning before tax. Anyway, c'est pas grave, no big deal. Other question? Okay, so maybe we can move to the next budget, which is the cash budget. Okay. So you have all these explanations already. The only thing I need to explain is this. So what you need to reach is this line number 17, excess of cash of deficiency. Once you are there, if it's negative, it means that you need to borrow money. Okay? And if it's positive, you don't need to borrow money. You can pay back money. Okay? So this one is a little bit more tricky. So I'll let you a few minutes to work on this, and I just conclude 2 minutes before 10 to see where you are, and we will finish that tomorrow anyway. So let's try to make it April here to reach the excess of. Let's try to finish this part already. What is in blue? Let's try to do it. Try to calculate the excess of cash or deficiency for April. Okay, what is the excess or deficiency of cash for at the end of April? If you have any proposition, you can share in the chat. That's correct. That's correct here. Bravo. So you cannot do it for the other months for the moment because I'm talking to here. So for the first month is correct, but now you're going to borrow money. So it's going to change your beginning balance of May, you know, so for the other months, it's not going to be, it's going to be like this. Yep. So yeah, give me some minutes and I can explain to everyone. But globally, what you have is that you should borrow the negative amount, 13,450. This is a deficiency of cash, so this is the amount you should borrow. Okay, so that should help you for line 18. And if you borrow this amount, think about what would be the ending cash, knowing that maybe you have some help on line 23 about the ending balance. Yeah, that's correct, Kian. That makes sense, right? Because we borrow the money to reach, you know, the level of cash we need. So if we borrow money, of course, we will be at the minimum level. And the minimum level is the minimum cash balance expected by the company, which is 10,000. So that makes sense that after we borrow money, 13,450, we have 10,000. So of course I'm explaining, I'm talking to Kian here, but I'm not forgetting other students, the other students. So we're gonna take time to do that, right? So we got 6 minutes left. So let me just help you with some part of the document, and we will keep on going with this cash budget tomorrow together, okay? So firstly, I'm gonna be practical, and I'm gonna say, okay, what is already the information I can take from other budgets? Okay, so collection from budget, schedule B. Okay, so I can just take the information from this budget, right? Collection. And I can drag my formula here. And maybe I'm gonna try to find the good color, okay? So total cash receipts is the same thing, actually. So no fill. And that's it, okay? Ending balance 10,000, so yeah, that's correct. Purchase, disbursements and purchases, we have it here, right? Yes, it's 10,000, but I didn't finish the thing for the moment, so that's why I don't have anything for the moment. Yeah, B7 is 16. No, it's 46, right? It's the total collection budget, I think. No, it's correct. 46 is correct. This one is correct. It goes and say the total of this one. So that's the total of this one. That's correct. Okay, so operating expenses, Schedule F. So we have it here. Okay. That we have. And acquisition of new fixtures is actually something that we can find in the case. Here, we have some information, right? So they bought new fixtures for 3,000 cash in April, and the company won 10,000 as cash balance at the end of each month. Okay, so these two information I will use to complete my schedule. So I've got 3,000 of new fixtures that I buy here. Okay, so now I can calculate this. Yeah, it's okay, 46, right? And so for the minimum cash balance, it said in the case, we want 10,000. Okay, so you have to understand that here you should put 10,000 as well. Okay, so that's it. And the only thing that I need to have for information to finish this month of April is, where do I find the beginning balance of April? Is, of course, I find it in the balance sheet at the end of March. Okay, so the amount that I will have here will be actually the amount that we find in the PDF document, going back to the beginning balance sheet. We have cash here, it's 10,000. You can find it here, okay? 10,000. This is the one I will use to put in my document here. So that's 10,000. And I'm going to do the way, put in red. So I know it comes from my balance sheet. I'm just using the formula here. And I reach what I wanted to reach with you just before 10. I got 10,000 at the beginning. I receive 46. So the total I have available is 56. I had 10 at the beginning, plus I received 46,000 cash from the customers. On the other hand, I have to pay 42,700 for the suppliers in purchases. I have to pay 13,750 for the operating expenses. I also have to pay for a new fixture 3,000. So the total amount I will pay during the months is 59,450. But also, I want at the minimum to have 10,000 on my bank account. So my total needed is what I need to pay plus the 10,000 I always want to have on my bank account. So it's 69,450. And so finally, I compare all the cash which is available for April, 56,000, with all the cash I need for April, which is 69, and I find a negative difference, 13,450. So this is what we call the deficiency of cash. So this is certainly the amount I will need to borrow. Okay, so do you have any question? Because I see it's already 10:01. So, okay, my proposition is that we stop here. I don't ask you to finish the document. We will begin tomorrow working on this document again, okay? So maybe if you want to do something, if you want to work on your case for tomorrow, what you can do is to identify in what we did already today, if there is something not clear, that you would like me to explain again tomorrow at the beginning of the course, okay? And so you ask questions through the chat, okay? And if there is no question, or once we have answered the question, we just keep on going with this document, okay? Because I don't want you to try to do it by yourself. We take the time to do it together tomorrow, okay? So you can rest. And will you upload the Excel file today? So I will not upload the solutions, the Excel files to because you have to, these solutions, you have to build it by yourself, but you have the video you can look. Okay, the video will be uploaded, but I don't upload the solution on Excel because I want you to do the Excel on yourself, okay? It's too easy. If you have all the formula, you just copy and paste the formula, you don't understand. You have to make your own formula, but I will upload the video in 1 hour or 2. Okay, and I will provide you with the PDF version of the solution when we are finished. Huh? But the formula, it's part of your learning process, of course. Okay, but we will take time to rediscuss that tomorrow. Okay, so I think we're finished for today. So thank you for your attention. We keep on going with this case tomorrow. Okay, and then we will do a more complicated one. Okay, same industrial company instead of retailer. Okay, and thank you everyone, and thank you Mai for the show during the break, I would say. Okay, yes, I will upload the video in 2 hours because the video takes time to render, so it will be available in 2 hours. It takes 2 hours to render. It's not my fault, it's just technical problems. So I will upload it in 2 hours or so. Okay, so enjoy your evening and see you tomorrow. Thank you. I will have a nice day, and you have a nice night, and we meet again at 7 p.m. tomorrow. Okay, enjoy the rest of the evening. See you tomorrow. Bye-bye.